What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the bearded boy wonder, Dave Bartosiak. And today, my friends, I've got a chip on my shoulder. Yes, that's right. Extra salty coming off of this weekend. I've got a hit list. And we're going to take it out on the world this week. What do I mean by that? What I mean is we're going to kick some butt and take some names in this market because we've just flat out been done wrong. It's a travesty what's going on in this market. But where there's a will, there's a way. What's up, Bill, Kurt, Dean, Danny? How's everybody doing? You know, I tried to check in the chat a little bit earlier today, and the servers were down. Did anybody else experience that? I came in a little later. Trevor, what's up? And there was some stuff. How about that Momo, huh? If you guys hear a loud noise, it's because the Sunny Isles Beach Intercoastal Yacht Club is a terrible place to live. And they love to make noise, doing whatever it is they do without telling the tenants. So, again, I apologize if you hear a loud, like, drilling noise. Trust me, as annoying as it is on the video, it's 10 times more annoying in public, let me tell you, or I mean in person, rather. Okay, good. So everything's up now, huh? Yeah, right. That's a good one. So a couple things coming down the pipe, and I want to talk to you guys about this actually first before I like to get into it. Before I get into it, I like to talk to the computer screen here because you guys might be actual people. I'm not quite sure yet. If there's just not a bunch of bots that are following me around. You guys might be real people. So I think there's going to be some changes down the pipe for Live Trader. But the good news is I think you guys are going to like the changes that come down the line. I'm knocking around a few things. One, I'm trying to open this up because we're like in this little pocket. We're in a weird sort of, like if you drew like an organizational chart of Zach's, right? We'd have kind of the ZU umbrella, right? And then that's where like Momentum Trader is and Home Run Investor is and all the other stuff. And for some reason, Live Trader is like over here in the corner, like hiding. It's like behind a wall. It's like multiple walls. There's like angry beasts on either side of it. So what I'm going to try to do is bring this into the realm of normalcy, and there's a couple ways we're going to do that. The feedback that I've gotten is that the Friday sessions are good. So I think nice. I like that, Danny. Yeah, all we need is like a hot girl that free date. Ooh, I want to chat, right? Anyway, so I think what I'm going to do is I'm going to try and have more sessions like that Friday session where it's a little bit more open, and maybe it's just kind of like a heat map of what happened, over the course of last week, what stocks we should be looking at, what's on the radar kind of thing. Make it shorter, give you kind of a list of like what we should be looking for and maybe setups that we're looking for throughout the course of the week, that kind of thing. I'm still going to do these earnings previews like this, but they may change a little bit. I think people like, doing this analysis and everything and looking at all this. But as with growth, I don't know, whenever things get bigger, you get, I don't want to say like unintended consequences, but you get fringe people that introduce levels of negativity that shouldn't be there. You know what I mean? This should all be like a very fun and positive thing, and there shouldn't be a lot detracting from that. There shouldn't be too many haters out there, but I'm getting a little bit of haterade, and this is like the most mild way that I deal with it. Like, in real life, I would deal with it a much different way. And I'm just trying to make ZLT as positive as possible at all times for all parties involved, I guess. So I can't have like my number one stress at Zach's being live trader. You know what I mean? So, and it's not you guys. I'm preaching to the choir here, but they know who they are. Dr. Paul, yes, it's glorious, isn't it? We're getting there. I'm just going to touch on this real quick. It's very rare, guys, to get a double spike in volatility like this, right? Where it spikes, fades, and then spikes again. And you can see that just on the chart. I mean, you had this sort of one intraday spike up, and then I guess a little bit of a, I mean, I feel like this is part of this run-up still, if you're looking at the closes. But to get this like exhaustion to the upside and then it comes down, that just doesn't happen that often. We just kind of got trapped in that. I mean, if you look here, we got like a spike up and a drop, spike up and a drop, right? You typically don't get like the double or triple like that, but it's what it is. All right, so let's get back to the task at hand. Burlington Stores, Burlington Coat Factory. They're more than great coats. In fact, they are great earnings stories here. Let's take a look at the price consensus EPS surprise chart on Zacks.com. Black line corresponds with right y-axis, which is price. Little green arrows, earnings beats. Can't find a red arrow because there are no earnings misses. These multicolored lines represent the evolution of our Zacks consensus estimates over time. And correspond with the left y-axis. Kurt, I know, that did hurt. I saw that with you. I feel like I bled with you that day. What did you learn, Kurt? The takeaway should be go a little further out when you're first putting those on. So you only went out 1 week when we put that on. Give yourself at least 2 weeks. So I'm 2 weeks out when we initially did it. Mine are expiring this Friday. And it's stressful. The longer you go out, the less stressful it is. Okay, so that's, if there's one takeaway, my friend, that's what I want. That's what I want. Yeah, Dean, you're 100% right, man. The haterade, the haters, the hate, man. It's just you know, it's just one of those things. But yeah, you go out a little bit further. Go out a little bit further there, Kurt, and you'll be all right. Okay, so back to Burlington. I mean, this is just a beautiful growth story. Look for a time when revisions have come down. Do you see it? Maybe a little bit here, but for the most part, these guys don't play. And not only are you getting these upside revisions, but you're getting growth too. Kurt, we're going to get it back. Don't worry about it. You can apply that same process next time volatility spikes. Just go a little further out. It's going to be all right. So anyway, back to Burlington here. I mean, this is gorgeous. So they're going to beat, and there's going to be growth. The question is, how's the stock going to react, right? Because we've already seen this market where you can come out and you can beat, but the market's not going to like you. TJ Maxx, another off-brand, right? Responded well. Ross responded well to earnings. So overall, this isn't one of those sectors that's just going to get beat up for the sake of getting beat up, right? Or industries, rather. It's going to get beat up for the sake of getting beat up. And this off-brand sort of specialty retail, I think they're looking for forgiveness. And now here on the stock, we've got this downward trend channel. And one of my favorite things is buying breakouts of downward trend channels. One of my favorite things to do. I also like to short when they get to the top, but I love playing the breakout. Okay, should a more bullish thing, you know, end up showing up for us. Okay. Oh, DSW. Yeah, look at DSW, guys. sort of. I would put this in the same boat as those guys, kind of, right? They only sell shoes, but it's the same sort of story, kind of off, not off brand, but just cheaper, right? And then Target, that's a whole different story, though. You know, got a different scenario up at Target. But overall, I'm kind of liking the setup, at least heading into Burlington Stores. Okay. All right, now let's look at the detailed estimates. So we have it as the Zacks rank number 2 buy right now, which is pretty good. They're up on the day. They're going to report before the market opens on the 24th, I believe that is Thursday. So you've got the rest of the trading day today and all day tomorrow to figure out what you want to do. Top 27% of our Zacks industry rank. Interesting. A little bit of revenue growth, not much. 7% this quarter. A little over 7 again next quarter. Current year looks like 8. Next year is supposed to slow a little bit. I don't know if that next year number is going to come into play here yet. Current quarter EPS, though, almost 30% EPS growth. Next quarter looks like 13%. Rounding out the current year at 22.5 and next year at 13.67. Over the course of the last 30 days, you have 2 analysts increasing their EPS for the current quarter, current year, and next year. Let's see what the overall effect has been in the consensus, though. Not much of a move in terms of the current quarter numbers or next quarter numbers. But the current year has gone from 389 to 397. Still, not much. 443 to 451. While we're on these estimates here, guys, I want to point something out. There's been a change to Zacks. Not sure if you heard. Before, we used to make all these estimates and everything, all our calculations that we made, we would take out employee stock options and some other items like that from the EPS estimate, okay? And now we're going with what the rest of the street does, just to avoid some of the confusion. You know, this is really, I think the decision was more for our referral partners and sites versus anything internal. I don't think we've changed the secret sauce at Zacks in terms of coming up with these ranks based on the EPS that we're using, but I think on the site we're changing everything so it's going to line up more. You know, in the past you may have seen where our EPS number was a little different than others' EPS number, and that did create some confusion, so a little bit more continuity here now. I know that was totally a random aside, but that's what I had. All right. Getting closer in on revenue here, we do see 8%, 5%, 9%, and then slowing into the future. And then on EPS, we're going to see a similar story here. Had some big growth numbers, and these are slowing. So the growth is slowing a bit. This is what I was talking about, guys, the gap versus BNRI. We used to use these BNRI numbers, and now we're going to be showing the gap numbers. That's what I was talking about with the EPS. So EPS growth slowing a little bit. Let's look at how these guys have done relative to, let me pull up their proper industry here, not the internet software services industry that's loading up here for some reason. Because I was looking at Momo before. 5 years, I'm not worried about 5 years. What's happened year to date? In year to date, there is some outperformance here in Burlington. Most of that coming basically from March on. So where a lot of the support, lots of support came. So a little bit of outperformance, pretty decent outperformance actually. Shares of Burlington up 2.6%, while the rest of the industry is actually negative on the year. That's because it's all this retail discount variety. So it's a pretty big chunk. Let me see if I can get just the Zacks sector here, and you'll see they have underperformed the retail wholesale market in general. I don't know why they get them. Well, I suppose. All right, so one more thing, of course. Let's look at our consolidated surprise. See what these guys have done on earnings previously. I'm glad I never have to wear a pea coat again. Well, maybe I do. One day I might have to wear a pea coat, but it's not going to be long. Like, not going to be anytime soon. That's going to be a long time away. April had a beat, didn't do much. January, decent beat. October, real nice, solid move. 20%. Put some stank on it, son. July didn't move much. July 2016, rather. April 2016 had a move. So they haven't had a huge downside move. Haven't been negative on earnings since the Jan 2016. So it's been a long time. Long time. Technical chart. Not a great scenario, okay? I'm actually going to write Zach's Confidential about how useless the death cross is, and how arbitrary it is. That's going to come next. I think it's actually due the Tuesday after Labor Day, which I'm not too happy about because I'm going to be traveling, and I'll be in Chicago, so it's going to be a little bit of a pain, but that's okay. But how arbitrary 50-day and 200-day moving averages are in relation to each other. Now, I'm going to make the clear distinction. Moving averages, in my opinion, so here I've highlighted the 50-day moving average. I think a stock's interaction with a moving average is much more significant than a moving average's interaction with another moving average. Okay? Because here you can clearly see sort of behaviorally how Burlington Stores interacts with the 50-day here, finding support at the 50-day, and then coming down to touch it again, and then dipping below it. This is a famous move here. It's a guy named Joe DiNapoli. He's an awesome futures trader. And he used to do moving average offsets. I won't get into the nitty-gritty of why, but you basically take the 25-day moving average and just shift it off to the right by 5. A little bit arbitrary, but whatever. But he would look for this up, down, up close, basically. Like, if you're above it, below it, above it, and then, so these would be reversal patterns that he would look for. Is this interaction with the 50-day or the 25-5 in his case? So this would have been a perfect little DiNapoli setup, actually, to the downside. Of course, assuming it was the 25-5 and not the 50, but you catch my drift. So my argument is that stocks really don't care that the 50-day is crossing over the 200-day. That's silliness. It's really just a function of mathematics. Yes, it's telling you something about the stock, but it's not telling you anything more than you're gaining just from the stock's interaction with the moving average. So when this breaks down below this 50-day moving average, that's significant, right? If it breaks down below the 200-day, that's significant. And it interacts with the 200-day a bit. Just come under pressure under the 200-day here. But this little cross here, right? If you subscribe to this kind of stuff, then now this is the death cross, and from here is where the stock is supposed to go down, to oblivion. I'm just going to point out that this happened when the stock was at 80, and it's at 86 and change right now. But obviously, I'll be a lot more eloquent and be able to articulate my point a lot better when I'm writing it out over extended period of time. But moral of the story is that I believe that stocks interact with moving averages, not the interaction of moving averages with themselves. Okay. Rant over. What am I seeing on Burlington? You definitely have the downward trend channel. You're under the 200-day moving average, which isn't good. But also leads me to believe that the stock's a little bit oversold. You're in this downward trend channel, but we have a commodity channel index buy signal and money flows just starting to tick up into positive territory, okay? So bears, basically 78 would be your support that you've got to watch out for. Bulls, it's all-time highs. 104 is It's really where that firm resistance is. You've got one line of resistance here at this sort of $92 level. Look how nicely this volume profile is shaping up. So guys, I put on this volume at price indicator. That's this vertical histogram on the side. So this shows you relative to the price how many shares have been traded. Okay, so there's a lot of work on market profile in day trading and day trading theory and auction market theory and all this stuff. But basically, you take a look at it and you say, well, where the most volume went out, that's the market's, volume point of control. Okay. So here you're saying the market's volume point of control is basically spot on where the stock is trading leading into the earnings report. Okay. So you can see this other little major bump here as an attractor should the price start to squeak into there. And then if you see here, there's another little attractor, right? Well, there's another bump. That's sort of beyond that trend line, but a little bit. So 77, 78 is kind of the downside, all right? I lean heavily on this volume at price because this is telling you where the battle has been fought in the past. Where have a lot of people bought and sold shares? That's important data. More important than, in my opinion, volume on the dailies. Because do you care if 10 million shares traded on February 10th? Or do you care that 10 million shares traded at $87? For me, it's more about the price level versus the arbitrary day when something may or may not happen. Obviously, you use the two in tandem. Anyway, so there's your story. Quick little TA there. Let's take a look at our options chain, shall we? Now, we don't have weeklies on Burlington, so we got to go out to the September 15th expiration. I like it when I find stocks like this because if they're not weeklies and they're well subscribed, like this one, look at how much volume there is on Burlington. They're still a little bit off the beaten path, and I think that gives you an opportunity to make some money when nobody's looking. So 86. So this one's going to be a little bit squishy, so to speak, right? We're still going to use the 85 because that's the closest strike. Bust out your handy dandy calculator. 85 calls going 460 by 5. We're going to call that 480. The 85 puts are 3 by 320. We'll call that 310. Looking for 790 away from that 85. Or 9%. 9% move. Pretty healthy. It's about what we were looking for anyway, right? So about $8 pretty much. So basically 95s to the upside and 79s to the downside. That's about spot on with what we were looking at, right? So 85s and 80s, or 95 and 80. This is going to be the realm that we're in. This. Get back to the stacked view. We're going to stay in this month. Now, here's the thing, guys. When I'm a little bit away from a strike price like this, you're in a little bit of a pickle, right? Because a part of you goes like, well, I don't want to necessarily buy out of the money. And I don't necessarily want to buy in the money and have all that additional value that's at risk, all that premium that's at risk. So when I see something like this and I am in betweener, it does push me towards a credit spread a little bit. The other thing pushing me towards a credit spread is we've been quite successful on credit spreads, and it's the debit spreads that keep blowing up in our face. So I'm starting to lean a little bit more on credit spreads on some of these. But again, let's go back to this chart on Burlington. It's been under pressure for a while. So if it does find a bid, it's liable to make a push back towards the highs, especially when you're talking about having a whole nother month ahead of you, right? because you got all, basically the first 3 weeks of September to make the move. Remember, September 1st is that Friday after this week, right? So it's basically following Friday. We still got 3 weeks on this thing. So you could certainly catch some drift if it squirts out to the upside. Or, again, a bad report, and this thing is along this bottom trend line, and it could get worse. So it's one of those things where I hate buying out of the money on my long end. But I also think that the thing is going to move a lot, okay? So what you can do is you can be a little bit more aggressive in your selling if you want to. So let's put this in motion. So first on the bearish side. So the bears basically say 95, there's no way you get 95. But if you're a bear, you don't have to go all the way out to 95. You can just go to 90. And you can say, I don't think so. These guys are gonna sell off because you're up here. You're at the top of this trend channel, right? So you're going to have technical pressure pushing down if there's a bad report. So it's almost, I'm not going to say it's guaranteed to go down to 76 on a bad report, but I'm saying it's tough for me to envision a scenario where you get a bad report and this leaks out above this line. So I think you can use that line as a nice little line in the sand, selling out of the money. So this is a bearish operation here. So what a bear can do is sell the $90 calls for $245. You could simultaneously buy the 95 for 108. So the net credit here is going to be 137. The difference in the strike prices is $5 minus that 137 is 363. So you can make 37% on this trade, and all you need is shares of Burlington Stores to trade at or below $90 at expiration. So I think for the bears out there, that's a decent way to go. Because you've got to be concerned as a bear that, okay, well, they've already sold off a little bit here, so they could come under more pressure, okay? So I'm going to say bear credit short September 15th, 90-95 call spread for a 137 net credit. Mr. Patel coming through with the September FXY 85 puts. Don't let me leave before we talk about that, okay? Remind me. Somebody remind me to circle back and talk a little bit about the yen while we're all here. All right, so that's a bear situation. If you are a bear, I think you go with the credit. Bulls, you got two choices. You either stomach buying a little in the money, or you go further out in time and give yourself more time for your trade to work out for you. So what do I mean by that? So I mean you either, as a bull, you either buy the 85s, kind of grin and bear it, and then you'd sell out, you'd sell the 95s. You guys know I like the halvesy, but in this case, I think you sell the 95s. You don't try to get too cute. So here's one option for the bulls. Buying the 85 is going to cost $480. Simultaneously selling the 95, you're going to get back 108. So $372 is the net outlay. But the difference in the strike prices is $10. Minus the $372 is $628 on $372. So you can make 168% on this trade. But you would need shares of Burlington to close at or above 95 at expiration, which is just 3 weeks out, right? But since you're buying this 85, already has $2 of intrinsic value. So really you have 280 that's at risk in this trade, right? Well, I mean, granted, the 480 is at risk, but $2 of it is actual value of where the stock's at right now, right? With the rest of it being implied volatility and time value. So since 2 of it is intrinsic, you're basically getting back $1.08 of the 280. So 172 is this kind of fluff that you got out there, right? Does that make sense, guys? I know I've talked about this in the past, but there's one option. Okay, the other option is that you go out to October, you give yourself a little bit more time, and you can go a little bit further out. You go out of the money, you do the 90-95. This one you're going to have to be more patient with, and the math is going to be a little bit different, but I think you're going to be surprised. Going long the October $90 call is going to cost $375. Simultaneously shorting the 95, you're going to get back $208. So 167 is your net outlay. The difference in strike price is $5 minus the 167, $333. So you're talking a triple up. So it's up to you. A little bit more patience. Now here's the risk versus reward on all this, though. Yes, you're gonna have to be more patient, but you're going out of the money. But this is the thing. Because you're going all the way out to October, while you're gonna obviously have an impact right away on the earnings, if this goes in the opposite direction, you're not gonna get completely destroyed on it. Okay? So this one pays off a little bit more patience. It's leaning a little bit more on the Zacks rank, leaning a little bit more on this post-earnings drift. This is a little bit more of a conservative trade. So I would call that front month trade like a 4-star risk, and this being like a 3 stars of risk, right? So it's scaled down a little bit. But I'm still going to say that the bull debit is long October 20th. 90-95 call spread for a 167 net debit. Okay. I also think that that's going to end up being the trade that pays. I think going a little bit further out, being a little bit more patient. I know a lot of you guys don't like to wait that long. I mean, like October, I'm going to be a dinosaur by October. Like, what are you talking about, Dave? It's the middle of August, right? But the way that things have been going in this market, I'm more comfortable. High star, higher risk. You got it, Dean. Maybe stars aren't a good way to do it. Maybe it's not, right? Okay. Now this is the thing with Burlington. There's no like front week call. Still got to go out to September. So lottos are a little bit more expensive. So somehow utilizing that 95, I think, is the way to go. If it really breaks to the upside and starts to run. And yes, I thought for a second there, Bill, I thought you disappeared. I thought you disappeared. Kyle's got a good question. Why not just do a put credit spread for September? This is why. Well, that was a bad drawing. Let's try this again. Okay. So this is why I put a short call spread, but not a short put spread. I put the short call spread because, okay, so basically there's a couple of things that can happen here, right? Either the report is good report is neutral or the report is bad, right? I mean, essentially, we've got three things that might happen. Okay. Now, so if the report goes good, I think the stock breaks out from this channel and starts to go higher. If the report is neutral, I don't think that the stock is going to linger. I don't think it's just going to linger at this level. But if the report is bad, you have pressure from the technical perspective here, pounding the stock down. So I think it moves a lot to the downside. So the reason why I'm saying don't do a credit spread for September is I think the scenario is such that if it's bad, that the stock's going to get beat up pretty good, and it's going to come all the way down to this trend channel. So if it's bad, it's going to move a lot. So then if you're wrong on that put spread, you're putting yourself in for a pretty big loss. So that's why. It was my risk to the downside that I'm worried about. Versus being bullish on this and expecting it to break this trend channel and move a lot. So now, not only is your risk great because I think this is going to break down, but I think your reward is much better because the stock is liable to rally to the upside. So that's why. It's a risk versus reward situation, Kyle. That's influenced my decision. And yeah, and Trevor, you bring up a good point with the straddle, but there's a problem. Is that we're already, I don't like how we're like in the money and out of the money. I personally don't like that. If there was like an 87.50 strike, I might consider it. But I don't like having to pay to be in the money on one end and then buy something out of the money on the other end. And I know it shouldn't matter theoretically, but just to me, it just does. Plus, they are still pricing in 9%. So it's not exactly like a small move that they're pricing in here, okay? Plus, we're coming off, these options got priced in when we had a little bit of an elevated VIX. Of course, over the last couple of days, the VIX has come down. But when I was first putting it together, these options are priced with the VIX at 15, right? Basically. And that hasn't been sucked out of here yet. So there's that. Yeah, when's Broadcom going to report? Isn't it Thursday? I think I have until Thursday. I'll consider throwing this in here, actually, Dr. Paul, tomorrow. I've got a couple people asking for it. I used to get asked to do things all the time, and then nobody sends me suggestions anymore on what stocks to do. So I think they're Thursday, right? Avago. I can. Here I go calling it Avago. We can switch it up, guys. I mean, we've got an agenda tomorrow, but I'm not married to any of this. 24th after the market close, so we might be able to do this tomorrow then. What was I gonna do? Or I can do this Thursday morning of. I'll pull an audible, guys. I'll make it happen. Whatever it is, I'll make it happen. So, ask and you shall receive, my friends. So, Mr. Patel, what we need for your FXY trade to work, my FXY trade to work, because I'm in it, this bottom's got to hold, and this dollar-yen pair's got to take off. It's got to take off. Ulta. Yeah, that's it, Fernando. I've got Ulta tomorrow. That's what I was going to talk about. So we have to talk Ulta. So I'll see if I can get Yeah, Best Buy is on Friday. Yeah, Ulta. That's okay. I'll throw in. We'll figure something out. I'll let you guys know, of course. Anyway, here we need this. We need this pair to rally. Now, it looks awful familiar, right? They don't ever make it easy. We do have Jackson Hole this week. Somebody's got to convince the market that they're going to allow the yen to depreciate again. That's what we need for this trade. I thought I saw the euro rolling over a little bit. This euro wants to roll over. It does. It's just going really slow, but that's okay. Look at how this USO trade is all over the place. Look at what they're doing to this thing. I still think they're wedging out here. I think this thing is going to come to the downside. And then, of course, we've got our... Ooh, 30.76. That's what I'm talking about. Woo! Woo-hoo! Very excited about this. I got the 34.30 put spread, which you guys all know. Very well documented. Could have closed it last Wednesday, Tuesday or Wednesday, for like 30 at $3. Could have closed it for $3. We'll see what happens to this thing. It's like, can we have a triple spike in vol? Of course we can. Anything is possible in this day and age, right? I don't know. We'll look at this. We'll have to look at this. Did we finally catch a little bit of drift in this? We need to change the ticker to POS. What is happening here? Just, gee, this is criminal. It's criminal. These guys. You guys know I don't like to make these super snap judgments on these things, right? Let's talk about Momo. Woof. Yeah, Michael, it is taking a long time. It's taking a very long time to drift up. Very long time. Momo is, I'm still trying to figure out the reason that it's down. Aside from we just wanted to sell a Chinese stock today because everything about that report was good. So I have this in Home Run Investor. If I didn't have it in Home Run Investor, I would be personally loading the boat on this thing. I don't know. Good guidance, good beat on revs, right? Beat on EPS. Man, Bill, 8th in a row. You know what's the thing about that? I had a little bit of a... I get streaky too. I had a few last week, though, on those shorts that worked out. We had like 3 of those in a row I was talking about on GBU worked. And then now we're on another streak, right? It's like when we go... Okay, what else? You know, the market, when the market's looking to hammer something, though, it hammers it. And if you look at Deere specifically, remember, guys, I made this argument. It's all about how it interacts with the moving averages. You don't think that institutions came in and bought John Deere when it got close to that 200 day? I think they did. I think this is a pretty safe bet here. Deere at 117. So this Momo thing, man. This Momo thing. I'll like I said, I have it in home run, so I have a lot of work to do on this, try and figure it out. But hey, remember I was talking about this sort of market point of control, guys? Now this has obviously established itself after this earnings report, but before the earnings, I'm sure it was like that a little bit. And it's right about where the stock is now. See? It's like a magnet for the price action. And then hopefully here in the case of Momo, it supports it. Still above that swing low. June 15th low, 35.02. It's at 36.71, so not terrible. And I think I bought it. Where did I get? Did I get it in March or somewhere? I think so. We're still going to be in the green on in a home run. So found a Chinese fund at Cayman Island has exited Momo. Yeah, but I mean that should. So maybe that's all it is, huh? Some kind of fun dumping. I mean that's typically what happens. Look at this. Look at how this has interacted with its 200-day moving average in the past. So if that's like a beacon calling this thing right now, I don't know. We'll have to see. Like I said, I have a lot of post-mortem I have to do on Momo there. So I'm definitely not done. Definitely not done here. Okay. And the deers. I mean, we went out a little further, so we've got some cushion. We're going to talk about that later on in the week. What to do with these things. If we can get some love. Looking for some love. All right, guys. Wow, that was a longer session than usual. That's okay. I needed to talk to somebody. I was feeling salty today. And it wasn't ocean air. It's salt. All right, guys. So that's all I got for you here today on Zach's Live Trader. Look for an Audible because I'll be playing an Audible here. I'll let you guys know about how we're gonna jam in, a Broadcom thing. Maybe I'll do like I don't know. Maybe I'll do something special tomorrow about it. We'll figure it out. Yeah, the same thing, Dr. Paul. FXE, the euro, coming under pressure, but it's just taking forever to develop right now. So we've got Jackson Hole. Maybe there will be some dovish commentary coming out of that. We'll see. So anyway, that's all I got for you guys here today on Zach's Live Trader. Mañana we're doing Alta, and then I'll either jam in Broadcom with Alta or we'll do it on Thursday. It might be better just to do it on Thursday. Trade that pays is the bull debit. So all the way out to October, that's my trade that pays on Burlington. All right, guys, that's what I got for you here today, and have a fantastic day. I will see you all. When will I see you? Mañana, of course. Have a good one, guys. Later.